Top story this morning has got to be China, because we are hearing that looks like China has set a growth target for 2012 at 7.5%, which is its lowest in 8 years. With the Chinese Premier Wen Jiabao about to address the annual lawmaking session of the National People's Congress in just about half an hour's time, and he is expected to tell the session that China is now aiming for that growth rate of 7.5% this year, and again the lowest pace since 6.8% GDP growth in 2008. Let's bring in Margaret Conley, who's got the story from Shanghai this morning. And Margaret, lots of headlines coming through and lots of targets being set by China.
Susan, this is that really exciting time when Premier Wen's transcript and the government work report is circulated to the press. This is before his speech in about half an hour. Everyone's pouring through it now to grab the headlines. We have a big Bloomberg team on the ground there. The headlines that they're bringing to us now, you mentioned the new GDP target of 7.5%. This is as the euro crisis impacts exports here. The lower target will leave room for better quality growth. That's according to officials. China will strictly enforce property curbs. This is another big issue. We've seen property prices fall. Officials are managing expectations by saying they're going to maintain those property curbs into the next year. Officials will gradually raise minimum wage, going to their point of improving quality of people on the ground. And China will make armed forces more modern, presumably shout out about security. Now, China will prevent a rebound in inflation. The country wants price stability. The 4% CPI target leaves room for pricing reform. We're going to get the latest CPI figures out in a couple of weeks here. Also, China will continue with timely fine-tuning of this economy. Susan?